Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Nasdaq Private Market has just published its mid-year private company report, which details transaction activity for the first 6 months of 2020. Joining me to discuss is Jack Cassel, Vice President with Nasdaq Private Market. Jack, welcome back to Trade Talks. It's great to have you with us.
Thanks so much, Jill. Great to be here.
Jack, what drove the $1.7 billion in transaction volume during this period?
Yeah, it continues to be a very exciting time in the capital market space. I think when we look back at the first half of the year, we had a lot of momentum coming through Q4 2019. There was a lot of venture capital market or money in the market. We saw a lot of deals happening at the tail part of 2019 that just happened to carry over into a strong January and February of this year. We saw a slowdown in March and April. As the pandemic hit, people had to look inward, kind of figure out which way was up for a few months, but slowly, or actually I should say quickly, at the tail end of April, we saw an uptick, not only in the public markets, but also specifically in the private markets. And I think another key element of that is just one, on the company side, the demand for their employees needing liquidity and requesting liquidity. And then on the investor side of the buy side is continued demand. And so I think that's the great part about the Nasdaq private market platform is that we're that centerpiece that's able to marry the demand and the supply in the private market space to help these companies to successfully transact.
And the first quarter was a record for Nasdaq Private Market, right?
It was a record year, not only on the 1.7 billion, but also on the total volume or number of transactions with 29 this year. And again, fueled a lot by the carryover of 2019. But I think another interesting piece is that about half of them were mid to early stage companies, so Series C or D or earlier. So as companies are staying private longer, we continue to see that trend of them running through their maturity. We're seeing more companies run these liquidity programs pre an IPO, listing, M&A, et cetera. But now we're actually seeing more of a trend, about half of these transactions, of companies earlier stage running these liquidity programs. And I think that's, again, demand from the employee base. As companies fight to attract and retain new talent, especially against public companies that are able to have that currency of their stock, they're looking to run liquidity programs earlier in their life cycle so that they can provide that for their employees as a benefit.
Jack, the COVID-19 pandemic hit the U.S. in March. To what extent did this impact transaction activity on the platform?
Again, we like the world, I guess, we did see a slowdown in March and April. We saw a lot of our conversations that we were having, everybody hit pause. Companies looked inward, they looked at their strategy, they looked at their burn rate, they looked at their head count, their expansion strategy, and had to figure out what the roadmap looked like in this new normal. With that, and again, directly correlated to the public markets, as they figured that out, we saw a lot of resiliency in the market, and they began to quickly turn around and start to run these programs.
So are you still seeing volume impacted, or has it picked up again as we go into the second half of the year?
No, it's continuing to pick up, thanks. They were seeing not only through June and July, but we're very optimistic through the second half of the year. And traditionally, for our private markets, that's been our strongest quarters is Q3, Q4, where we've seen the most number of volume, the highest number of transactions. So we're celebrating the first half of this year, but we're very optimistic through the second half of this year. And we think, again, through not only the buy side demand, but we're continuing to see large, we call them mega rounds of $100 million investments into these private companies. That is just creating more pools of liquidity in the private market. So we're very excited about the pipeline through the end of the year.
And we keep seeing headlines about the IPO pipeline with companies coming to market. Are there any interesting trends that you've seen at Nasdaq Private Market that correlates to the new listings pipeline?
Yeah, I think there's really two that come to mind. Again, Nasdaq is on the private market, similar to just the Nasdaq broader mission, is working with companies throughout their life cycle. So as these companies mature, we're working with them on the private market side, and it's been fun to see both sides of this evolve. So one thing, a trend we're seeing is companies running these liquidity programs prior to an IPO, and specifically a direct listing. So we have what we call our continuous market, where we're running in the private markets, continuous trading that for the sellers allows more windows of liquidity. So versus having a single transaction on a close date, you have the continuous trading that can run for a few weeks, even months. For the buy side, they have a better opportunity to get their fill or the allotment they would like. So versus having to put a single bid in at a certain price point, having the continuous trades allows them to fill their orders on a continuous basis to kind of round out the allotment that they're hoping to secure. Companies are doing this for a few reasons. One, for a traditional IPO, it's to clean up the cap table in a lot of instances. They may have some residual or older employees, founders, early investors that they're looking to take off the cap table or make whole prior to an exit. And then also, they're looking to, again, provide that liquidity to their employees to invite other institutional funds onto the cap table prior to a listing. And then as it relates to the direct listing, we've been working with a variety of different companies, but one of the nuances with the direct listing is you don't have the IPO roadshow 2 weeks ahead of or of your IPO, where the bankers and your advisors are taking you out and marketing this deal that helps to set the price of the shares. So in turn, you have to look at the secondary trading to identify the reference price. So through the continuous trading platform that we offer, we're able to not only run the continuous market, helping to provide liquidity prior to a listing, but more importantly, we're the centralized platform to run and execute a lot of the administrative work. And that's a big burden for a lot of the companies heading into the listing, because not only are they trying to prepare for an IPO or a listing, they're trying to run a secondary market while also doing their day job. So they've outsourced that to our platform, and it's been very successful. And we think that'll be a key trend through the second half of the year and for many years to come.
All right, Jack, and as we wrap up here, any final comments on what's to come for the remainder of 2020?
We continue to be, again, optimistic about both the public markets and private markets. I think we've invested heavily on the private market side. We've invested heavily in our technology. That really has put us in the lead in this market, leveraging not only the technology in our market technology, but also the team, the experts that we have, our analysts and customer success that are allowing the companies to continue on their mission, continue on their strategy to execute, while they outsource this to our team to successfully make their liquidity programs successful.
All right, Jack, appreciate the update on Nasdaq private market. Thanks for joining us on Trade Talks.
Thanks so much.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.